Welcome to another S&P 500 analysis. Today is January 18, 2023. We saw the sell-off today after it have tagged this trend line here. So is this the beginning of a major correction? This video, we're going to take a look at the sentiment and also the internals. Then we're going to take a look at the SPY, the ETF for the S&P 500, and the ES, the E-mini S&P 500 futures, and see what we could expect for the coming days. Let's start off by looking at this table here where I have all the indexes and also the 11 sector inside of the S&P 500 index. And we see that today everyone is red, so they all lost ground today, and no one has been spared. And as you can see, the worst performer is the consumer stable and the utility, and those are typically associated with defensive type of stock, right? So today it doesn't matter, everything got hit. And also year to date we also see the healthcare along with the consumer stable and the utility is negative for the year to date so far. And the best performer so far is the transportation, the Dow Jones transportation. So go figure. Now also the NASDAQ has been quite strong as well, and also the Russell 2000. See, the Russell 2000 year to date is gaining a little bit over 5.25%. So you could go and pause the video and then take a look at this table a little bit more in detail. I'm just going to move on and spare you from me going, each one of them. Now let's start looking at this sentiment chart here. As you can see, the VIX is coming back inside of this zone here, the 2030 zone. Let me change color on this here. And right now, the still relatively, complacent. The market participant, they are not really fearful. A lot of people was looking for a pop to come up above 30, and maybe it will in the next day or two. And also, the put call ratio is up at 1.17, so it's above 1 once again. Again, because the OPEX, daily OPEX on the S&P 500 is derivative, I really don't want to read too much into this right now because it really doesn't say much with these gyration, and also, the fear index, the VIX, is not really blowing up. So these right here tend to associate with a higher VIX level. But ever since the daily OPEX on these daily expiration option for the SPY, SPX, and the other derivatives. So I wouldn't read too much on that. So let's move on. And here the up-down volume ratio, and you can see that the down volume is by a margin of 5 to 1. Advanced decline, the daily advanced decline, there were 966 more declining issue than advancing issue in the New York Stock Exchange. And remarkably, you see that only 8 stock made new 52-week low, 103 stock make new 52-week high. So the number of new 52-week high outnumber the number of 52-week low by 95 today. And that's in a backdrop of the S&P 500 down 62 point or 1.6%. Here's the thing that we've been keeping an eye on is the cumulative advanced decline. You can see that we are still looking at this positive divergence. So with this, even though we got a little bit of a pullback today, we still need to have this come up and take out this high here. And right now, you see this level is, took out this high. So we basically are looking at somewhere around this pivot here to get taken out by the S&P 500. And the NASDAQ 100 also lost 1.25 point today, or 146 points. And you can see that the down volume is outnumber the up volume by a 3.5 to 1, the up-down volume ratio. And the daily advanced decline, there were 1,743 more declining issue than advancing issues. And here too, in the NASDAQ market, the number of new 52-week high outnumber the stock make new 52-week low by a margin of 88 today. There were 116 stock make new 52-week high versus only 28 stock make new 52-week low. And in the NASDAQ market, we are also looking at this positive divergence as well with the cumulative AD line. So this too, the NASDAQ 100, basically are looking for this pivot high to get tagged or get taken out to resolve this positive divergence. Now let's take a look at the ES, the E-mini S&P 500. Here's the market profile chart. And as you can see, today's price action have tagged this, yesterday point of control, and also resolved the poor low here, yesterday's poor low, as well as tagging the January 13 point of control, and also repaired this poor low from the 11th of January. So right now we are looking at a lot of single print. So there's a lot of poor structure that left behind today. And here is the updated chart with the poor structure being labeled for today. You see that there is a single print here between 4,014.75 and 4,006.5, and then there's another set of single print between 3,995 and 3/4 and 3,986. Now these are not exact because I don't have the resolution of the chart as the others, but it's close enough, and typically it's relatively pretty accurate. And the another set of single print at 39.66 1/4 and 39.47.5. And we also got the poor low here today at 39.43.75. So tomorrow, if the ES continue to come down and repair this poor low, look for this point, this single print get repaired here, and that is from the 10th. And also there is the point of control here as well that could also get tagged. So on the downside, look for these two levels, and maybe we could get a bounce back up. Now, if it open gap up, then we could also be looking at coming down, filling these single print. So just look for the single print as a potential target for tomorrow on the upside, and then on the downside is looking for this single print and also this naked point of control from the 10th of January to get tagged. And looking at this chart here for the ES, as you can see right now, it is outside of this balance area. So we'll see, would it be able to get back into this balance area and work its way back up. Now, if it continue to move down, there is this zone here near the 39.20. Might see a bounce off of that at 39.20. So keep an eye on that. But if it doesn't, then we could see it come down into this zone here. So then we could see a new balancing attempt inside of this zone. So that's what I will keep an eye on. Today is already tagged the lower range of the weekly expected move, and here's the upper range. And here's the SPY, the ETF for the S&P 500. As you can see, it got rejected from this trend line and into this lower range right now. This weekly lower range at between 392.60 and 390.30. So we'll see, will it get a bounce back up? If it doesn't, look for this zone here between 389 and 387 to see if we get a bounce back up from this zone. And if it doesn't, then we'd be watching this balance area to get chopped around here for the price. But if it stay above this zone, this range here, then look for a move back up to the 400, and even possibly get up to the upper range near the 405 area. So that's a quick look at today's price action and also the sentiment and the internal. It appears that, we are getting a little bit of a pullback, and it is not as bad as it looked, because I think right now we are still in this little bit of a zone here that we could set up a little bit of a breakout and suck some of the bulls in. So there's still a little bit of a game to be played here on the upside, but I do keep an eye on these zone down here just in case that they decide to spike it down. But I am looking for this zone to hold and possibly get back above near the 400, and also this 410 might not be this week, but in the coming weeks, probably we'll see this 410 get breached because of the advanced decline, positive divergence. Okay, so be sure to smash that thumbs up to help me promote this video. Thank you for watching and stay safe.